Okay, so you're pre-approved. Today I want to talk about the 5 big mistakes that a lot of people make when going out there and buying a home. The first mistake that I see people make all the time is they make cash deposits into their checking account where we're gonna have to source funds for your down payment for your closing costs. Maybe you're thinking that, I've got an old car that I'm gonna sell and I'm gonna use that cash for the down payment on the house. Not a problem, but it becomes a massive problem if you do it without telling us, and all of a sudden we look at your bank statement and there's a $15,000 large deposit. So we got to avoid cash deposits. Even if you have somebody that is going to be gifting funds to you, we can't just see a large, $50,000, $100,000 deposit for the down payment without having to source it and go down the rabbit hole and see exactly where it came from. So please do not make any cash deposits without talking to us first. All right, so the second big mistake that a lot of people make is financing a new purchase of something. So do not, under any circumstances, finance the purchase of a new vehicle. Maybe it's really anything that you're using your credit for. The reason it's such a massive mistake is because I think human nature is you're buying a new house and, you'd like to maybe have a couple other things that are nice and new. And maybe one of those things is a car. But if you're financing that vehicle, all of a sudden you have a $3,000, $4,000, $5,000, $7,000 a month car payment. That's going to impact your ability to qualify for the original loan amount that we had you qualified for. Now, it may not affect it at all. The key is to reach out to me and my team first to see if that's something you can do. Don't just go do it automatically without consulting with us. Don't open a new credit line for a new purchase while you're going through the process. Okay, so the third biggest mistake people make is they max out their credit cards, right? Because they're trying to conserve cash during the home buying process. Maybe they're trying to increase their down payment, and so they're putting everything on credit cards in the meantime. Big mistake, don't do it, because every lender out there is going to do a soft credit pull right before closing. And really what we're looking for is making sure you didn't open up a new line of credit, but all of a sudden if the balance on an existing account goes from $100 to $10,000, that's gonna change the amount of the minimum monthly payment. And it might go from $25 a month to $200 or $300 a month with a higher balance. Use your credit cards like you always normally would. So if you're going to the grocery store or out to dinner a few times a month and putting those charges on a credit card, but then you pay everything off, no big deal at all. We want to avoid anything that's a massive expense on credit that's going to max those credit lines out. Okay, so mistake number 4. Don't change jobs, don't change income, whether it's a decrease or an increase. Make sure you talk to us first. Most important, and we see this happen all the time, is somebody's been at a W-2 job, they've been employed with a company for years, and now all of a sudden, maybe they're an engineer. Maybe they specialize in something where they start to think, maybe I can do this myself. And so what they do is they go out and they start that new company, they start that new business. They've got a level of excitement for their hopes and dreams and building their future, which I think is awesome, but it will completely ruin your ability to buy a house for at least a year, but potentially 2 years, because when there's income that is self-employed, typically that means it's variable. By the way, self-employed also means sales where you have fluctuating income. Could mean that you're in the service business and if you get a lot of tips, that's a variable source of income. If you're a contractor, you get paid per diem for a project, that's variable. Anything that's variable is gonna be tricky, and we have to make sure there is some consistency with it so that the lender can take an average. Every lender in the country, it's not just us, they're gonna look at Fannie and Freddie Mae guidelines, FHA, VA guidelines, jumbo financing. They all require consistency with self-employed variable income to determine an average income, to determine your ability to repay the mortgage. And if you just launched that business this couple, 2, 3, 4, even 6 months ago, there's really no consistency yet. You may have had a huge month and then nothing, big month and then nothing, and there hasn't been that average that can be calculated. So if you're gonna change your job, change employment, you're thinking about going out there and starting that new business, that's super exciting. Let me help walk you through that so it doesn't jeopardize your ability to buy a house and really change the direction of your cash and total net worth. All right, so the fifth major mistake that people make is they think that because they're fully approved for the mortgage, if they've got another property, or if you're refinancing and you think that the loan's approved, for whatever reason, I think people stop making their payments for some reason. They think the new loan's gonna take over, and so whatever you do, don't stop making your payments on time until I tell you you are in the clear and that you don't need to anymore. Don't have negative credit inquiries. That's another big thing, is we see a lot of credit inquiries and a lot of changes to the credit report. Well, if that's happening and there's a negative or a late payment or a bunch of credit inquiries, that's going to change your credit score. And when the lender does a soft pull, that's gonna show up and that could impact your ability to buy a house. So try to make sure those payments are on time and we will get to a successful closing together.